Welcome to TMS Insights. It's February 2025. Ben, first time we're back on camera for 2025. And January in markets was a good month. It was up 3%, basically reversing a softer December.
Yeah, down 3%, I think.
It was,
September.
pretty much.
Yeah.
So, and that's the Aussie market. There's been a flurry of news from overseas, obviously the US. Earnings, we've had an inauguration of a president and we've had a lot of executive orders.
Yeah.
And most Januaries can be quite quiet. It's holiday season in Australia, but often with the North American and Northern Hemisphere markets firing, they don't have our break, a lot can happen. So let's try to bring everybody up to date. And we'll also talk today about the beginning of the reporting season here locally.
Yeah. Well, look, I think so. I guess there's a couple of things there. We've seen some real whipsawing markets on the back of Trump tariffs, Trump getting rid of tariffs, and this is going to be something which we just got to get through, live with over the next 4 years.
It's government, but not as we know it.
Yeah, and try not to pay too much attention to it. I think when you're making investing decisions, I think is an important thing. But the US earnings season has been playing out.
Yeah.
And again, we've seen some really good results. I would say there has been a difference this time around where, we had Amazon's results just dropped, Google's result, Microsoft's result. Great results, but definitely some sell-offs on the back of these results.
Yeah.
And that's been on, if there's one thematic, it's been much higher capex spend that these companies are going to do going forward on AI. So, the poster child for this is Google, which slightly disappointed. And then when the CEO spoke about it, he said the reason our cloud business has come in under is because we cannot keep up with demand, and we're going to have to spend $75 billion US dollars this year on data centers as opposed to 50, because as it stands now, we actually can't get people into data centers because we don't have enough capacity. So, but the flip side of that has been the old world businesses have performed very strongly
within those big tech stock parts.
Yeah,
so that's
the banks. We've seen the banks have been strong.
Of course, yeah.
The retailers have been
strong.
But in America as well, we've seen some great price reactions. So it feels like there's some confidence in the economy in Main Street.
And part of it isn't because they're old world. It's actually their benefits they're going to get from the innovations of AI.
Completely.
And they've been reappraised.
Yeah.
We were looking at the banks locally here. Now, Commonwealth Bank is on 26 times forward earnings. This is nosebleed territory, right? And we might have said that before last year. There is what is being assigned is a capacity for cost out.
Yep.
And revenue growth.
Yep.
There's no doubt about it.
Yep.
It may over-exaggerate it, but that's the point. Getting back on this, the boom of AI and the increasing cost to all players trying to enter that space, that's got a lot of similarities with other booms in other innovative areas.
Yep.
And so we know how these things play out. There can be some excesses.
Yep, absolutely. But I think we've spoken about this last year, is a lot of clients have sort of said, what do I buy to get into the AI trade? Commonwealth Bank might be the biggest winner in our market. As weird as that sounds.
Played out, perhaps, too.
It doesn't sound great, but potentially thousands and thousands of workforce could be made redundant because computers can do these tasks a lot faster and better.
And if we look out and at 3.9% unemployment in this country, that's not a bad time for this to be happening, rolling out. So in terms of big tech, obviously we've followed that in the US, and just reminding people, whatever we think of because you mentioned tariffs, it's obviously massive. We're not, from pure economic theory, not in favour of a worldwide tariff system. It's inflationary, it causes lower growth, misallocation of resources. As a tactic for getting things moving in a geopolitical sense, you can't always argue the fact that Trump isn't at all bad at being a tactician.
And getting things going, I think is, the difference in this early days, but this second presidency is he has hit the ground running this time around. Last year, apparently, it took about a year for him to work out
last term.
How to do things and get.
You run a campaign, you've got a couple of months to get organised. He's had 4 years of planning for this, and he's ready. And his co-president, Elon Musk, is also very ready. But the bottom line is, America's open for business, and that's why it's already started as such a positive thing.
Completely. Yeah. There is a shift happening globally.
Yeah.
And I think you're going to see it waves come through into Australia as well. Business leaders are very much saying we have to start to get productivity moving and to keep up, otherwise capital's going to disappear.
And this is important to understand. That just doesn't get quarantined to the 50 states of the US. It becomes a global sort of wave, doesn't it?
Yeah.
We even saw here that Peter Dutton appointed a shadow minister for efficiency to mirror what's going on in the US. And you see these sorts of thematics play out. That's how it works in global markets and global politics. So coming back to the local scene, Ben, reporting season started this week. It starts slowly, gets very busy next week and the next few weeks. Expectations, some signs. We'll talk about REA in a sec.
Yeah, I think it's, the market has obviously run ahead of this results season, and I think for the market to hold or to have that next leg, we need to see some revenue growth and some profit growth that is ahead of analysts' expectations, particularly in the blue chip area of our market, because that's been the one that's run hardest. So, it's like, as you said, we've only seen a handful of results so far, but I think that's key, because multiples do look expensive at the moment, but they could quickly look
if the earnings growth comes there.
And the market might be sensing that this is coming and has bid up stocks leading into it, which we do often see in bull markets.
It's also potentially expecting a rate cut sooner. I mean, it's changing all the time, but we had some decent CPI data there only last week, which suggested things are actually under control.
Yeah.
So 16th, 17th is when the RBA meets. Something could come out of that.
And current bond market pricing, for what it's worth, because the bond market has constantly got this wrong, is that there's 85 basis points in rate cuts in 2025. So that's 3.5 cuts over the year. We'll see if that's right, but that's a tailwind for the share market.
Yeah, that's right. So again, CP expansion as well. So it can explain it. REA Group is one of our favourites. Everybody knows that, and it reported yesterday. It's always early off the blocks, which we like to, and you would when you've got such good news to tell everybody as well.
Yeah, I mean, it was like I think one of the best results in years. It was tinged with a bit of Owen Wilson retiring as CEO. He's been there for a decade. I think this is the best result potentially under his stewardship REA has delivered.
And there's been some good ones. So
there's been some good ones. So it'll be a shame to see him go, but he's staying on for the next year, and I'm sure there'll be a smooth transition. But I think if, having listened to his presentation, if I caught out a couple of things, I think the big thing at the moment is, what he said was that the housing market at the moment is almost perfectly balanced between buyer and seller. So
at last,
and that's we've followed this business for years. It's rare you get these periods, but he also said I can't really see what's going to change that. Where the settings almost look ideal.
Short term, there'll be an election which slows things up a bit, but offset by rate cuts that's a really good comment, because he's been frustrated and successful in managing a very unbalanced market.
Completely.
And that were the tough years. That's why your comment's good. Now they've survived all that tough stuff, and now the market looking forward looks really good.
Really good. Yeah. And I think that is like the stock sold off initially, and I think
it's quite typical too.
And then it happens nearly every time. But so he did call out third quarter, fourth quarter. We've got a very weird Easter and Anzac Day lineup this year, where basically the whole country is going to be on holidays for a couple of weekends. We've got an election where you do get lower listings. So, and they're going to be cycling against very strong comps. So the third and fourth quarter last year were very good. So he said, if we can even have flat listings, even slightly weaker listings growth, that would be a great result.
Yeah.
So as they always have done, just calmed everyone down a little bit about what's coming. But I think you've got to look through those cycles, which we have done with this stock, and it's paid off in spades.
It's the line we use, Australia's premier growth stock.
It's got to be the best business on the market.
That's it. Yeah. So beautiful one. Again, so we get in a flurry of activity. Just to remind everybody, market releases are often before market, conference calls and investor briefings during the morning or the afternoon. So there's a volley of companies we'll be looking at in these weeks ahead. We hope to pick up some interesting insights from those, and we always love listening to the CEOs or the CFOs and hearing what they're saying about the inner workings of their businesses. But overall, Ben, this is a healthy business environment, and corporate profitability is expected to be mid-single digits overall. Which is good growth and supports some of the share price move we've already seen.
Completely.
We'll be bringing you an update a couple of times through this reporting season so that we can get some of that earnings data through and some of our
so inside out.
Exactly. So we look forward to bringing you those updates through the February reporting season.